Let's get straight to Steve Leisman, who's been working the phones this morning to get more on the sell-off that we are seeing. Steve.
Yeah, Melissa, one thing that's going on right now that seems to dramatically be affecting foreign markets and I think washing up on these shores is this announcement of a broad tax cut in England. And what's happened is a massive increase in the yield on the 10-year gilt. Take a look at the chart here. You've gone from, I don't know, call it the 350 area to the 378, 379 yield on the British 10-year. And that has really surged and still surging as Britain announces a debt finance tax cut, meaning it will be borrowing more money in foreign markets, essentially adding to inflation at a time when the fiscal side, you would think, should be on the other side of that and helping to reduce spending and helping reduce inflation. This also comes when they have a plan to subsidize energy and cap energy expenditures by British households. This also obviously affecting the pound, and you can see the pound at or near a new 37-year low. It was down in the 110 level the last I looked at it. There it is, still in that 110 level, bouncing around a little bit on the bottom there, but dramatically pressuring the British currency. And also, again, washing up on our shores. If you take a look at what's happened to the 2-year here in the United States, it has come up with, I guess, concerns across the fixed income spectrum on just how much the fiscal side is going to help the monetary policy side. Britain, you remember, just raised by 50 basis points. 3 of its 9 members at the meeting wanted to go 75. And what you see here is not a lot of commitment from the fiscal side. And I guess substantial questions here in the States about how much help that the Federal Reserve is going to get from the fiscal side, especially with elections coming where, you know, Democrats may have a chance of holding on to one or more houses. So not a lot of confidence out there. And it's been something I've been talking about for a while, Melissa, this idea that there does not seem to be much help from the fiscal side when it comes to fighting inflation. It's all been on the monetary policy side. Just one quick note here from Krishna Guha, who wrote, we see the sharp additional moves higher in UK yields and lower in sterling as highlighting a serious risk of a full sterling crisis and stay short across UK assets.
It is an extraordinary time, Steve, when you see a central bank doing so much to raise interest rates and you see its efforts being basically abolished on the fiscal side of things. It's just an inherent contradiction in policy in the UK, one that we're seeing also to some extent in Japan with the intervention in its currency market, but its effort to keep rates low. I mean, it's just an interesting time for central banks overall here with the inflation picture.
And you left out my favorite, which is Turkey, which again cut rates amid 80% year-over-year inflation. So you do have, you know, I know that it's sort of laughable, but it's still true. You do have the ECB and the Fed. I will point out that we don't necessarily have additional fiscal impulse from the United States here, but we did ask in the Fed survey, 80% of respondents said that they did not change their inflation forecast because of the Inflation Reduction Act. And there was one line, I'll have to find it again, where Powell seemed to make a slight appeal to the fiscal side to help out a little bit. But when I was a reporter in Moscow and I came up learning economics in the early days of the transition there was always a sense from the IMF and others that if you want to solve the inflation problem, it happens both on the monetary and the fiscal side. And certainly Britain this morning going the other way on that score.